to today's Daily Dose of Market Insights. Very good morning. I'm Kelvin here. Today will be the Thursday, the 9th of October, 2025. So as usual, before we kickstart today's Daily Dose of Market Insights, very good morning to all. Let's have a quick look at the disclaimer first. Give me a minute. Hopefully the screen is moving. All right, great. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This This presentation is for general information purposes and it's not investment advice. Past information is not representative of future results. Okay. So as usual, before we jump straight into today's rather slimmed down version of the daily dose, which I will only cover one particular chart of the day, let's have a recap what has taken shape yesterday in terms of the news flow, economic data release, and as well as in today's early Asia session as well, in their respective impact on those intraday movement of all those broad-based cross-asset classes that we cover on the daily basis, ranging from the FX market, the major stock indices, and the two key commodities, gold XAU/USD, and the West Texas crude oil. So let's start with the US stock market first. All right, so the US stock market continues to remain in a very strong bullish footing over here. So like I mentioned, despite the fact that there's a lot of chatter going on talking about this potential AI bubble, but from a technical analysis perspective, the medium-term trend and the short-term trend remains pretty much intact on the major US stock indices, primarily driven from the outperformance of the mega cap technology stocks. So yesterday, the mega cap technology stocks lead the bullish run in the US stock market yesterday, where the Nasdaq 100 that is heavily concentrated on these mega cap technology stocks outperformed with a gain of 1.2%, followed by the SPX 500 up 0.6%. The Dow Jones remains unchanged, but still holding above the key support level. Later I'll share with you guys very quickly. And very importantly, the small cap Russell 2000, I will use this as a gauge as well. Why? Because the current market rally in the US stock market is pretty much driven by the fact of this highly anticipated start of a new interest rate cut cycle by the US Federal Reserve, which has kickstarted in September last month. All right, so bear in mind the Russell 2000 is considered as a more highly levered US benchmark stock index. Why? Because the component stocks inside the Russell 2000 are considered a smaller small cap company, which primarily uses corporate funding, be it from the bank or be it from the bond market, to fund their business operation, rather than those mega cap technology stocks that have a huge amount of cash flow to get it self-funded in their business operation. So as long as the Russell 2000 continues to also bask in the limelight, that would also potentially keep this medium-term and short-term uptrend phase intact for the US stock market in general. So this is the heat map of the S&P 500 yesterday. So very clearly you see a deep sea of green in the semiconductor industry within the technology sector of the S&P 500. So Nvidia continues to bask in the bullish limelight, up by 2.2% and spreading across to the rest of other semiconductor / chips related stocks. Broadcom up 2.7%. AMD continues to be up by 11.4% with this recently announced deal with OpenAI over here. And why the Dow Jones underperformed yesterday? Because of the underperformance of the major US financial stocks yesterday. All right, so bear in mind the Dow Jones Industrial Average has a heavy weightage through the Goldman Sachs, which is down by negative 1.67%. And very interestingly, why is it down? It could be a bit of position adjustment ahead of next week unofficial start of the Q3 US earnings seasons, and every time the start of the Q3 earnings seasons will kickstart with the major US financials. So I will talk more about that when we cover the Q3 earnings reporting season as we head into the onset next week. All right, so potentially it could be just some kind of position adjustment ahead of US earnings season next week, which will unofficially kickstart from the banks first, right? And being that Goldman Sachs is one of the top component stocks, I think it's the top three component stocks of the Dow Jones Industrial Average, which is down by negative 1.7%. That actually explained the Dow Jones underperformance yesterday, where it closed almost unchanged. So bear in mind, let me very quickly go through the technical chart of the major US stock indices, even though I don't cover in much detail. So this is the Dow Jones Industrial Average. So the Dow Jones Industrial Average, which is in our platform called the US Wall Street 30 CFD index. So that I mentioned two key levels to look out for yesterday. Pivotal support still remains the same at 46,400, where price action managed to be held above this level. And also price action yesterday do dip down at the start of the US session. It rallied up, and where it dipped down, it also dipped down right exactly at the retest of this lower boundary of this ongoing minor ascending channel that has been in force or in place since the minor swing low of 26th of September this year. And very interestingly, yesterday push up attempt to retest our first intermediate / upside trigger level, which is the 46,920 level. So price action still remains the same. So in order for the bulls to gain traction, you got to break above 46,920, and there is no signs of a bearish pressure yet. Why? Because price action continues to be held above this 46,400 pivotal support level and also the rising 20-day moving average. Very quickly, a quick update on the Nasdaq 100. So Nasdaq 100 yesterday pierced past our first resistance level at 25,090, and during today's Asia session now is doing a slight minor pullback over here. So I would tighten my pivotal support level to be at 24,795 over here. So this will be my short-term pivotal support level, 24,795, pardon me, 24,795. To maintain this ongoing bullish, short-term bullish outlook on the Nasdaq 100, but potentially there could be some form of minor pullback coming into play into the start of the US session. So minor pullback to look out for will be 25,090. That was previously our first resistance. Now turns to a pullback support, and as well as this meeting line over here. Okay, which is very close to the lower limit of this ongoing minor ascending channel that I drew from the low of 2nd of September at 25,000, right? Around 25,000 level. So 25,090, 25,000, using 24,795. That will be my adjusted short-term pivotal support for today to maintain that bullish outlook on the Nasdaq 100. Next resistance level to look out for will be the next Fibo extension cluster level at 25,370 as it continues to evolve and head up towards the upper limit of this minor ascending channel, right? So that's for the Nasdaq 100. Okay, over to the FX market yesterday. So over the FX market yesterday was rather a mix. I would say not a mix. Was bullish for was actually bullish for the US dollar, but the US dollar managed to hit a resistance level, and in today's Asia session there is a slight dollar pullback over here. So the US dollar index rallied for the 3 consecutive sessions starting from Monday, and this rally is being driven by two political situations, one in Japan and one in Europe. So in Japan was the potential sentiment attachment to the new Japanese upcoming new Japanese Prime Minister, not confirmed yet because she Takachi got to be confirmed by the Japanese Parliament in order to actually officially take up the post of the new Japanese Prime Minister. And Takachi herself is a protege of the late former late Japanese Prime Minister Abe, who he has advocated for a rather ultra easy monetary policy in Japan. But that, which I mentioned to you guys yesterday, fundamentally is doesn't be in line for Japanese we call it Bank of Japan to actually evoke another zero interest rate policy again, because currently the Japanese economy doesn't doesn't justify that. So the rally of the dollar yen is more sentiment driven. I would say at least in the near term, you could see further potential upside, which I shared with you guys on those levels yesterday in my yesterday's daily dose. So for yesterday, there was a push up in the dollar index over here, driven also by the weakness of the lackluster euro dollar, because the euro was being pulled into the forefront or being lackluster due to this political turmoil in the French economy because of the sudden resignation of the France Prime Minister on Monday. Okay, and what's interesting is that the rally managed to stall at a resistance level at 98, 90, 9, okay, this level here. Let me do the settings again. 98.95. All right, managed to store this 98.95 level over here. And in today's Asia session, there is a slight pullback of negative 0.1%. All right, so the dollar itself right now, if you look at the 5-day rolling performance of the US dollar, the dollar yen still remains rather firm, right? Rather firm. So there's this a big white space where the dollar yen has starts to spike up. It's not spike up, rallied since Monday, and it's not do any form of a retracement. But the rest of the other major dollar pair starts to trade sideways yesterday over here. All right. So what's interesting over here is that pertaining to the FX market, also the one that is supporting so-called this dollar firmness yesterday was also the release of the FOMC meeting. So yesterday's release of the FOMC meeting is actually showcased more of a debate among the US Federal Reserve officials in the previous FOMC meeting in September. So in the previous meeting in September, yes, all the officials actually agreed to have this consensus of cutting rates by 25 basis points in the September meeting previously. But however, the minute shows that some officials are concerned about inflation pressure in the US economy over here. And also, let me highlight to you. Okay, also participants stress the importance of taking a balanced approach in promoting the commodities, employment and inflation goals as they consider their next move. All right, so that means, i.e., there is still some debate going on that some officials are kind of uneasy to do another interest rate cut in the upcoming October meeting, which is on the end of this month. But however, the Fed funds futures market continues to price in a high chance of a cut in October. All right, so this is the Fed funds futures market over here. If the current pricing behavior of the Fed funds futures trader, yes, even though yesterday's minute release shows some officials cautioning about the sticky inflation environment in the US, but the Fed funds futures market still showing a high chance of a 92.5% chance that the Fed may cut another 25 basis point on the upcoming 29th of October meeting to bring down the Fed funds rate to 3.75% to 4%. So that is only a slight dip from from a day ago before the release of the FOMC minutes that was at 95%. So after the release of the FOMC minutes from 95.1%, it dipped down slightly to 92.5%. So let me expand the tab for you guys to see. So instead of if you look at the aggregated tab that actually show the probability for future ahead FOMC meetings, so there was a slight dip of there was a slight reduction of the probability of another interest rate cut. That means the third cut for this year on the last meeting for the year, for this year, which is the 10th of December 2025 FOMC meeting. So previously the odds was around 85%. So that has been reduced yesterday to 77.6%. All right, after the release of the FOMC meeting. Still a high chance because it's still above 60. So market participants are still having confidence that these market participants are referring to the Fed funds futures traders because this is taken account of the Fed funds futures market. So Fed funds futures traders still assigning a rather high odds of 77.6%. Yes, it indeed came down before the release of the FOMC minutes. That was about 83%, but it's still hovering above 60%. So that I still consider as a relatively high chance that the Fed will potentially be still embarking on its potential interest rate cut cycle going into the remaining months of 2025. And also the Dow hasn't changed much for 2026. So for 2026, market participants are looking at potentially two interest rate cut by the time it hit the last meeting of 2026, which is on the 9th of December 2026, a 67% chance that the Fed funds rate will be at 3% to 3.25%. So that is actually an implied two interest rate cut for 2026 after a potential three interest rate cut for to end to 2025 on the 10th of December FOMC meeting. All right, so that's for the FX market. Now, bringing to Asia over here. So the Asia market continues to bask in the limelight as well in terms of stock market performance. So in Asia, today will be the return of the China stock market traders. So last week China is closed for the Golden Week for their national holiday. So on the 9th of October, the China A share market reopened with a bullish limelight. So the CSI 300 is up by 1.74% over here. So despite the fact that there is actually one negative news flow that the market strung off or ignore, was the preliminary release of this Golden Week holiday consumer spending. So market participants tends to look at this data to gauge whether China consumer confidence has returned. So why is China consumer confidence very important? Because we know that in the last 3 to 4 years, especially post-COVID year, China is potentially in a deflationary risk spiral driven by the government clampdown on their e-commerce business operation and as well as the property market. So that actually lead to lackluster consumer spending, lackluster business investment from the corporates, and eventually there's this deflationary spiral that has been enforced in the China market. And only recently, in the last 1.5 years ago, this differential spiral starts to actually get more and more lesser. All right, so in order to see whether this differential spiral is still intact in the Chinese economy, they tend to look at those kind of important variable to have a gauge of China consumer spending. So for the initial preliminary release for the first 4 days, all right, so sales for key retailers and restaurants grew just only 3.3% during the first 4 days of the holiday. That means not the full holiday, for the first 4 days only. The whole holiday takes about a week. Last week, so the first 4 days. So that was only half the growth of pace since during the labor market break in May. But market totally ignore this not so rosy figure, but choose to focus instead on the upcoming closed door meeting. So this is a closed door meeting. I suspect that during the end of the meeting, the local press will tend to report some of the outcome. So there will be a closed door meeting between the top leadership of the Chinese Communist Party that will be held from the 20th of October to the 23rd of October to review development plans for the next 5 years. All right, so this is planning ahead for the next 5 years, and potentially there will be policies that will be implemented to rebalance the economy towards consumption. So market participants are looking forward to this positive development that drives up the positive feedback loop that is being seen at the reopening of the China stock market today after a week long of closure for the Golden Week National Day holiday. And if you look at the CSI 300 over here, so I tend to monitor the CSI 300 more than the China A50. Why? Because it's giving me a broader gauge of the China stock market, because the CSI 300 consists of component stocks both from the Shanghai Stock Exchange and as well as the Shenzhen Stock Exchange. So it's a very comprehensive gauge of the China stock market. And this China CSI 300, this is the monthly chart over here. So one bar is equal to 1 month candle. One candlestick equivalents to 1 month, 1 month of price action. So now it's up by 1.7% as we are speaking. And most importantly, it has started to turn around since the retest of the long-term pivotal support at the 3,000 level, which is so very close to the lower boundary of this ongoing long-term circular ascending channel exposed the exposed the GFC, which is in November 2008. And right now, it has really surpassed the previous peak of January 2023 and the previous peak of October 2024, and now is hitting close to a 4.5-year high. All right, 4.5-year high over here. So the last time it was high was in August 2021. So now it's trading close to August 2021 levels. So very clearly, it's trading above the 200-day moving average. It's now inching upwards towards the upper limit of this long-term ascending channel that has been in play since November 2008. And bear in mind, this is a very long, this is the monthly chart of the CSI 300 index. So from a technical perspective, it's telling us that there is a high chance that the CSI 300, or i.e. the China stock market, is now undergoing a major uptrend phase. All right, no longer a major downtrend phase, which potentially also gels well to the Hong Kong stock market that we cover on the daily basis. So for the Hong Kong stock market right now, the Hang Seng Index, today there's some profit taking, but the profit taking managed to close in a positive, almost unchanged right now. So the Hang Seng Index is almost unchanged, but the high beta, so-called Hang Seng indices, which is the Hang Seng Tech, that comprises mainly the China big tech stock that has been riding the China AI boom as well, up by 0.9%. So if you look at the very quickly the performance of the China Hong Kong 33, that represents our Hang Seng index over here. So Hong Kong 33 is the CFD index that we name in our platform. So no change. The pivotal support still remains the same, 26,570, which I highlighted yesterday. Today at the start of the session, there is a profit taking, but profit taking managed to held exactly at 26,570 before shaping that bounce. So upside trigger level 26,935 that I highlighted yesterday. Above 26,935, potentially seek out 27,205. No change on the levels. All right. So another index I want to share with you guys will be the Nikkei 225. So the Nikkei 225 continues to bask in the limelight as well, taking on the positive Q both from the US stock market and the other Asia market that continues to remain positive as well. So yesterday we do have a pullback view of the Nikkei 225 or the Japan 225, expecting to pull back towards the 47,050 level. But after yesterday's move, it only printed a low of 47,697 over here during the Asia session, then before shaping this minor bottoming formation that's being seen in the US session. So with this minor bottoming formation that's being formed and the hourly RSI back up above the 50 level, the conviction for this minor pullback heading towards 47,050 has been negated. So with that, this could be a sign that it could continue potentially resume its bullish impulsive up move sequence again on the Japan 225. So with that, my minor pullback view has been negated. So I'll be using 47,455 / 47,050 short-term pivotal support level, resistance level to watch 48,860, 49,070. Above it, potentially seek out 50,0870, 50,540 for now. All right, so that's for the stock index. So very quickly now, let us go through the movement of the commodities market. So for the commodities market, the gold continues to remain resilient yesterday. So if you look at the gold price on the daily chart, let me share you guys very quickly for gold. Yeah, this is the price for gold over here. So gold price continues to bask in a bullish limelight, in line with the political number one, debasement of the US dollar. Story narrative is still intact over here. So gold yesterday added up 1.44% as it continues to trade up above a closing level of 4,041 level, as it trade above the psychological 4,000 level over here. So in terms of the very short-term movement of gold, yesterday it hit the 4,011, 4,024 resistance level that we have in our bullish bias for gold over here before shaping that pullback in today's Asia session. And this pullback stopped exactly at that resistance that we highlighted yesterday. It now turns into an intermediate pullback support level over here. All right, so In that case, I will still maintain that bullish bias on gold XAU/USD. So very quickly, new levels to watch over here will be a tighten short-term pivotal support at 3,966. So as long as the pullback didn't surpass below 3,966, we'll still maintain that ongoing bullish impulsive up move sequence potentially for gold XAU/USD. Next intermediate resistance level to watch out for will be 4,084, 4,087. Okay, that's for gold XAU/USD. And also in today's Asia session, oil price also did manage to clear above our pivotal resistance that we had yesterday because of this news flow that where Trump mentioned that hostage release is expected probably to happen next Monday as the Israel and Hamas deal has been more or less been done for the first phase. All right. So Trump, he mentioned in his social media post, I'm very proud to announce that Israel and Hamas have both signed off the first phase of our peace plan. So given that first phase of the peace plan more or less has been done, release of hostages between two sides, that reduced the geopolitical risk premium in the Middle East, which eventually softened oil prices. All right. So for the WT crude oil price, no change in terms of the levels as price action managed to dip down below the pivotal resistance zone that I highlighted, which is right at the 20-day moving average as well, 6260/6330, and the Hamas peace deal, the first phase has been more or less been concluded. That could reduce geopolitical risk premium and also potentially keep a cap on oil prices. Next support level to watch will be the range support of 6090/6055/6010, which is the 15/30 May 2025 lows. All right. So let's sum up the first segment of the daily dose. Okay, I have a kind of a walkthrough with you guys what has taken shape yesterday, and so very quickly give you guys an update of those key levels to watch in those respective instruments that I touch on as well. So now, what is the chart of the day for today? So before I touch on the chart of the day, let me expand my screen over here so that you guys can have a better view of the chart. So the chart of the day will be focusing on a particular major stock indices, not on Asia, not on US, but this time around on the European benchmark stock index, which is one of them, the Germany 30, representing the German DAX. Why I choose to feature this index? Because potentially right now we may start to kickstart another round of fresh impulsive up move sequence on the Germany 30 after it traded in a messy sideways range since the summer months of this year, whereas it underperformed the Nikkei 225, it underperformed the Hang Seng Index, it underperformed the major stock indices, but right now it's about to roar back to life again. So why? Firstly, it managed to clear above the 20 and the 50-day moving average over here. Price action continues to evolve in this minor ascending channel that I drew from the low of 25th of September. Price action on the hourly momentum indicator continues to show signs of bullish momentum as it tries to shape a series of higher low, still hasn't hit the overbought region yet. And yesterday it managed to clear past this sideways minor sideways configuration that has taken shape previously from last Friday, and it managed to clear past this level yesterday. So with the clearing past above the 24,550 level, the bullish conviction has been increased for the Germany 30, representing the German DAX over here. So for today, potentially any minor pullback, so pullback zone to watch out for will be 24,550, 24,470, but I don't want to tighten my pivotal support to be so tight at 24,470 unless it has a bullish breakout during the European session and the hourly close above 24,655, where price action managed to stall at yesterday US session yesterday. So why this 24,655 is important? Because this 24,655 is the current all-time high that is being printed on 10th of July this year. So with an hourly close above 24,655, that I will tighten my pivotal support to 24,470. So for now, pivotal support will be the minor swing low of 6th of October and 7th of October, and as well as the lower boundary of this ongoing minor ascending channel that has been enforced since 25th of September 2025 low. So using 24,330, that will be my adjusted short-term pivotal support level, maintain that ongoing bullish biasness in the Germany 30 CFD index. Next resistance level to watch will be 24,780. Above it, seek out a higher resistance level at 25,025, which confluence with the upper limit of this minor ascending channel, and as well as a Fibo extension cluster level as well. Only a bearish breakdown below 24,330 will invalidate the impulsive upmove sequence scenario to allow another round of minor corrective decline sequence unfolding again, retesting 24,155 / 24,090 next intermediate support level to watch. Okay, so Germany 30, that will be my chart of the day for today. Still maintaining that bullish bias as it now starts to kick off a fresh potential bullish up move sequence, potentially showing signs of breaking out its current all-time high level at 24,655 that was printed previously in July this year. All right, so that's for my chart of the day. So before we go, let's have a quick look at the economic calendar. What are the key important events / data to look out for today that could have an important or significant movement on the broad-based cross asset classes? All right, so today will be the Thursday, the 9th of October over here. So at the start of the European session, at 2 p.m., we have Germany balance of trade figure for August. So that could potentially influence the Germany 30 and the German DAX CFD index, and as well in some form the euro dollar and as well the euro crosses. Then at 7:30 p.m. we have the ECB monetary policy meeting accounts. So this is equivalent to the monetary policy minutes, the meeting minutes of the previous ECB meeting in September. So that will be out at 7:30 p.m. So that also could potentially influence the movement of the Germany 30 CFD index, and in some form the euro dollar and the euro crosses. And most importantly, that could impact the majority of the movement of all the broad-based cross asset classes will be Fed Chair Powell public speech at 8:30 p.m. Singapore time. Okay, so that is pretty much important. So that will overshadow another Federal Reserve official speaking at a different venue at 8:35 p.m. Fed Bowman over here. All right, then thereafter, I don't think we are able to have that weekly jobless claim data report that is coming out because of the closure of the US government. And this weekly jobless claim data is being processed by the government statistical agency. So I don't think you will be able to release out given that the closure of the US government is still intact over here. Then at 12:45 a.m. Singapore time on the 10th of October, Friday, another Federal Reserve official speaking, Fed Bar, he will be speaking at 12:45 a.m. And heading into the early Asia session at 6 a.m. on Friday, we have RBA Governor Bullock speech, as well as RBA Ken official speech over here. So both of them are speaking at the same time at 6 a.m. Singapore time. But market participants will be more concerned or concentrated towards the RBA Governor Bullock speech instead, which is at 6 a.m. Singapore time. All right, and also one that could potentially influence the dollar yen over here will be at 7:50 a.m. Singapore time, the release of the Japanese Producer Price Index, the PPI. So for the PPI year-on-year basis, market participants is expecting a slight dip to 2.5% year-on-year. So anything that is below 2.5%, let's say at 2.4 or 2.3%, that could potentially weaken the yen further and strengthening the dollar yen as it continues to bask in a bullish short-term sentiment. All right, so that sum up the daily dose of market insight for today. Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.